Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. Following our podcast of the last 2 weeks where we discussed the long-term and the short-term investment case for emerging markets as an asset class, in this week's episode we focus on the divergent trajectories of two emerging economies, namely China and Argentina. As such, China and Argentina are divergent in many different ways, including the size of their economies, geographical locations, and a model of governance, amongst many others. The key difference at the moment is the level of investor confidence in these two economies. While China suffers from a crisis of confidence, Argentina appears to have been recently treated with an overdose of investor optimism. Let's start with China, where the investor confidence has fallen quite significantly over the past several months. As such, the confidence in China's real estate sector has been falling for several years now. The COVID-19 pandemic and related policy from Chinese government eroded the confidence further. Following the lifting of zero COVID policy late last year, the confidence has improved slightly but quickly turned south in absence of policy stimulus from Chinese authorities. Confidence of consumers, businesses, and investors has fallen over the recent months. This is also reflected in the poor equity market performance, where MSCI China Index fell circa 5% and MSCI China A Shares Index fell 10% compared with a solid 7% gain in global equities over the past 6 months. However, the more recent actions by the policymakers in China, including the mini stimulus and the support for real estate sector, have the potential to revive investor confidence should they be followed by steps to increase the confidence of consumers. Also, any normalization of ties between the US and China are likely to help too. Moving to Argentina, investors have cheered the victory of radical libertarian Javier Milei in the presidential election there. Just over the past week, Argentina's local stock market index rose 42%, while the index of Argentine ADRs rose 34%. Some of the drastic proposals which Mr. Milei has proposed have delighted investors and business people who were disappointed with the country's performance in the past. Mr. Milei has previously promised to dollarize the Argentine economy, abolish the central bank, and shrink the number of government ministries from 18 to just 8. Mr. Milei has also called for reductions to the government spending, currently at about 38% of the gross domestic product, by up to 15 percentage points. While such drastic actions, which are termed shock therapy, might eventually take Argentine economy on a more successful path, this sudden change in sentiment is completely ignoring the risks of a rocky government transition and huge economic challenges ahead, which include rampant inflation, crushing levels of domestic and foreign debt, and an empty treasury. While China and Argentina might be incomparable on several different metrics, making a comparison now on the investment case of these two countries throws two interesting messages. First, we consider investor confidence as a contrarian signal, and to that extent, any incremental changes in investor confidence in China are only likely to be positive. For Argentina, where investors have recently turned more positive, any disappointment regarding the delivering of the government promises is only likely to be sharp negative. Second, at a more macro level, the divergence between these two economies highlights the travails of emerging market investing. Considering the emerging markets as an asset class would mean putting China and Argentina in the same bucket without acknowledging their differences. Hence, this also reinforces our view that active management is the best way for emerging market investing. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. You were listening to the Global Investment Insights podcast from ADCB Asset Management, and my name is Kishore Muktinutalapati.